Welcome and hello to all of you. Now we have with us Mr. G. Padmanabhan, Non-Executive Chairman, Bank of India, and Mr. Uday Kotak, Managing Director and CEO, Kotak Mahindra Bank, for a fiery fireside chat on banking, fintech, and COVID, a banker's view. Welcome, sirs, and now over to you, Padmanabhan, sir.
Thank you very much. Welcome, Uday, once again. I think you have become a sort of icon as far as the Indian banking system is concerned. I would venture to say that the institution that you started in 1985, it became a financial services conglomerate in its true sense. And although you were not one of the first in terms of going in for a full banking license, I think overall, if I look at where you are, it has served you extremely well because you could see the initial adoption of technology in the Indian banking system, probably the learn from the others' mistakes and then get into more modern versions of technology, which has stood you extremely well. And today you are a full service bank with whatever other subsidiaries that you have for the full financial services, and probably you are just the right size because I think I must say that having spent 3 decades of my life as a central banker, the central bankers are a very strange lot because they always one of the characteristics they have to be born with is that they should learn how to worry every day. They worry when too much happens. They worry when too little happens. They worry when it is the institution becomes too big to fail. They worry when institution is too small to survive. But as far as you are concerned, probably you have hit the right balance, and you again have the first of being a non-banking finance company which got converted into a bank and successfully that. I would venture to say that probably when the other your counterparts had technology-backed banking, you started with technology at heart in terms of the new products that you innovated, whether it is 811 or the kind of interest that you started offering for your SB account holders, which are all very unique experiments. So, can I probably start with asking you to spend some time know how do you see the journey so far? Okay.
Thank you, Mr. Padmanabhan. And first of all, I must acknowledge that the role you played in getting technology to the forefront as a central banker in your earlier avatar. And I know your passion for driving technology in bringing about change in banking was at the core of many, many changes which the RBI implemented over years and has continued that practice towards embracing technology with all the risks surrounding it as well. It's a very delicate balance between moving forward at the same time making sure that we have a strong ability to protect the banking and the financial system. So with that background, yes, it has been a very interesting journey. I still recollect in November 1985, we decided to set up this little company with 700 rupees of capital. And then we struggled to raise capital to 30 lakhs, which took us more than 6 to 8 months, and which we completed sometime in 1986. But we have been fortunate in many ways. We have been the product of India's financial sector reform. And I must say that from the time of the 80s to where we are now, the kind of progress we have made both in the marketplace as well as certainly a credit to the regulators across the board, whether it is RBI and thereafter SEBI, and of course thereafter IRDA and the government, of course, to really focus in terms of development of the financial sector as an important part of the regulatory framework and not just what can go wrong. Because if in the earlier stages we had not done that, the development of the financial sector would not have happened to the extent it has. And therefore, I am actually grateful to India and the Indian financial system for evolving from where it is in the mid 80s. And we were also fortunate that while we started with becoming an NBFC, banking was the last piece we entered into in 2003. And our initial journey was much more the evolution of Indian financial services, many of them did not exist in the form they are today. Whether it is the mutual fund industry, the insurance industry, the securities industry, or the investment banking industry, those evolved over time, and we became a bank only in 2003. And when we became a bank in 2003, the big question in our mind is, what will just another new bank do in this world where there were lots of banks in India already present? And I'm saying that I again thank the overall financial system to be able to give us the space, and it is linked to deregulation. You mentioned about savings deposit rate. In 2011, the RBI decided to deregulate savings. Till then, the savings deposit rate was decided by the RBI. Therefore, there has been gradual and solid reform and deregulation towards a more open marketplace, which has happened over a period of time. And I think technology is also a very big factor to this. And in our life, we have defined ourselves in different roles. We were a non-bank till 2003. Our model post 2003 was Bank Plus, and that's the model which we have followed as we went forward. And to your specific question on embracing technology, in our early stages, financial services and banking drove our pursuit for technology. We are now coming to a point where technology will be the driver, and other things may actually be equal or follow as we go forward in this whole area of the brave new world we are heading to. Therefore, in a nutshell, at my heart, I am a believer that technology now is at the forefront, and we've got to constantly question ourselves on digital versus physical in terms of the future. Of course, the big black box in this whole technology revolution are 2 points. Area of risk, and second is the area of security. Both these are very big questions in my mind, and these are the ones which we need to have good answers to as we go forward and leapfrog into a brave new digital world.
Thank you, Uday. Very, very interesting. And that automatically leads to the second question that I had, which is the following. I think, see, basically, when you talk about the risk and security, that has assumed new dimensions as far as the COVID or the post-COVID world is concerned. Because today we are talking about where earlier, when you talk about banking or anywhere banking, this anywhere was with relation to the customers, basically, location or the gadgets wise. Today, we are talking about anywhere banking. We need to be concentrating on the bankers being in a position to offer these services from anywhere, because the physical location is becoming very difficult. Now, once we realize that, where do you see this relationship between the banks and the fintechs going? Because I think there has been a long debate as to whether they are going to sort of collaborate or compete. At least in my mind, I'm reasonably clear that as long as the banking, as the great Samuelson defined, is a very simple business, but the only difference is that you deal with other people's money, then the problem is that of trust. So the trust is given by the banks, the agility is given by the fintechs. So I would rather think in terms of a collaboration rather than a competition. So where do you think this is going? How you have approached this issue in the past, and where do you think this is going to change in the post-COVID world?
You know, I think, frankly, if as a banker, I always ask myself the question, when I go to sleep every night, will we have a bank next morning? And the reason I ask this question is for two specific perspectives. One, would somebody have stolen all the money overnight? And the second is, will a competitor have disrupted the traditional banking model as we know? And I think in many areas of profit pools within banking, I think the digital world will significantly compete and play out and even out the profit pools which banks have historically enjoyed. if there is one area where I think the big differentiation of banking, even in the future, will be, is the area of risk and risk management. Because finally, that is an area which is at the core of banking, the example you gave of Samuelson. Because when you're managing other people's money, you have to be even more careful with that than you are with your own money. Because recklessness has been one of the problems which the financial industry worldwide has seen, essentially around measurement of risk. And I think the danger with digital and models is they are much more on the past. And when I think about models, even in India, pre-COVID, did those models factor COVID?
No.
And what will happen in the future to those models, especially in fintech based and AI based lending, which has happened in the Indian consumer industry unsecured? I think the jury is out. Therefore, I agree many parts of profit pools will be taken away by competitive factors outside banking, because a customer wants a service, not necessarily the entity which provides the service. But one area where banks will always be able to differentiate, as long as I can see, is in the area of risk management, where in addition to data and analytics, we will have to figure out how judgment becomes a core part of a model. And that is the most difficult part to put in place.
Yeah, true. But I think the problem that comes in when we talk about fintech versus the banks, particularly from the view of the regulator, also is that the fintech gives most of its importance to the customer convenience. While
Yes.
customer convenience is very critical, I think, as you rightly put, when a banker, a seasoned banker like you, goes to sleep thinking tomorrow whether my money or my accounts are safe, or my money is in my bank, or it has been hacked. Interestingly, I recall an example where one of the banks called his customer in the UK and said that, I'm sorry to tell you that your account has been hacked and your money is lost. I believe the answer he got was, it is not my money it is lost. My money is lost only when I use the money. The money is lost without my intervention, then that's your money that's lost. So that's the position that the banker is dealing with. Now, in that scenario, when it comes to risk versus convenience, now because you have used enormous amount of technology, you have been the front runner in many of the introducing new products, the customer convenience. How do you see this negotiation or your collaboration with the fintech really working? How do you ensure that you are able to get a reasonable balance?
Very happy to collaborate on an ongoing basis, because we learn from the fintech industry. We are very happy to collaborate, partner. We are also open to be putting money to work where there are investment opportunities alongside with the fintech. But this is a world of what I call as cooperation. There will be areas where we will cooperate. There is areas where we will compete, and the lines are getting constantly blurred. And therefore, we should not necessarily assume that everything is going to be collaborative. And one other important point in the post-COVID world, which we are seeing, is either things work out in a big way and become hugely successful, or wither away very quickly. Just whether it is COVID or whether it's the future marketplace, as I see it, the room for it is absolutely clear that the strongest will sustain and the weak will find it very challenging. And you will therefore see, essentially, if you look at the example of Zoom, it zoomed in a period of a few weeks, and therefore, but sustainability is also important. Therefore, the success will come quickly, ability to sustain it is going to be important, and winners and losers will get sharper in the future.
True. Very good. I mean, in fact, one of the areas, even if we get more granular about the financial sector, where we have seen enormous amount of technology changing the landscape, is the Indian payment system. I think without argument, everybody would agree that particularly the retail payment system, we have one of the most modern or the best run payment systems in the country. And examples like the UPI and others, I think the world is trying to mimic what India did as far as the central infrastructure and driving technology is concerned. But having said that, technology adoption in India continues to lag, and often the comparison that is made with is our neighbor China in terms of the size and in terms of the usage. There is the amount of digitization that has happened in China is mind-boggling, and probably we have many years to catch up if we are to make a comparison. Now, in your view, why so? I mean, is it that something we could have done better? And that leads to me a question which I have often wondered, and I don't have an answer. So probably I thought I would bounce it off you. Is that is digitization in a country like India demand driven or supply driven?
Padmanabhan, I would want to first say that the Indian mindset of an approach towards technology has been a typical middle class approach of wanting to serve customers by providing a service. Therefore, if you look at the whole technology evolution in India, it has been essentially service-based models. You provide a service at a price and make your margins. Therefore, all the software services companies which have seen phenomenal growth have been essentially service-oriented. I think the area where true entrepreneurship was needed earlier and probably needed even now is in the area of being creative and entrepreneurial in ownership of products which have global platform ability. And it is here the product mindset and entrepreneurial mindset from taking that creative risk and building a product of global scale and size is something India probably has been a little late to the party. On the other hand, China had nothing on the whole technology front. It started from scratch and probably built a strong domestic national ownership kind of a platform, and actually did not allow some of the global majors like Google, Amazon, and others to capture their market in the early stages. India, on the other hand, was pretty open, and I'm not saying that was wrong, but we kept our markets open and we let a lot of our consumer ownership move away to global majors. Therefore, today, you mentioned about 811. If we are looking for opening 811 accounts, many of those accounts are sourced by customers who are on Google or Facebook. And we are paying a price to Google and Facebook because they are rendering a service or a lead and giving me a customer. But the customer goes on to Google or Facebook and not on what we have created as domestic products or platforms so far. And therefore, for real ownership and leadership in the digital world, where China has scored over us, is complete ownership of the customer by large companies like Alibaba's and Tencents and others. We have not done it in the past, but we are seeing early developments on that with some of the very large players now, including some of them in the telecom sector.
Okay, so that leads to probably a more direct question. In the digitization journey, as we open up, what is critical in the initial stages? I mean, the specific thing which I'm grappling with trying to find an answer is that should it be in the initial stages more customer friendly, onboarding easier, ensuring the safety, or we should try right from the beginning to ensure that digitization from day one has to provide an option which is cheaper, so the government and the Reserve Bank directly gets into mandating the cost of transactions. Now, these two issues probably are ongoing debates which keep happening. Happy to know your view about it.
Now, my view on this is, especially in the early stages, I would much rather see the marketplace develop. Therefore, there is a joke going on. Y2K and success of Indian software happened because government was not involved. And government found out about the sector after the sector had taken a significant leadership on the global platform. And I would much rather let innovation and development happen in the marketplace. And only if we see a situation of monopolies and or profiteering, that we need to see a competition commission kind of a mindset. But let's not be excessively interventionist if the marketplace is developing well on a very fundamental basis.
True. Okay, now I think with the kind of financial conglomerate structure that you have built up, the use of technology becomes very critical in terms of the supervision or keeping a track of what is happening in your other subsidiaries that is happening. Now, how have you ensured this? How you are able to monitor this on an ongoing basis? What's the kind of roles that your own in-house technology or your collaboration with the FinTech is helping you to keep this track? And that obviously leads to the question that one of the issues that gets talked about quite frequently in terms of what has been happening, let's call them for this seminar's sake, failures of regulation or supervision, is because the adequate use of what they call the RegTech, technology and regulation, or SupTech, which is regulation, technology and supervision, has not been entirely harnessed by the regulators. And had they been done, and since you have been associated in turning around some of these NBFCs which have gone into problems, would be happy to hear about your views on this.
Yeah. So first of all, if you see so far, the challenges to the financial sector have been much more individual entities rather than conglomerates on a relative basis, with the exception of IL&FS. Other than that, most of the problems have been individual entities. Therefore, whether it's a public sector bank with an issue with a jeweler, which is say Punjab National Bank and Nirav Modi, or whether it's a PMC bank, which is a standalone bank, whether it's challenges which Yes Bank faced, which was a standalone bank, or whether it is DHFL, which was a standalone housing finance company. With the exception of IL&FS, which was a problem of a conglomerate and a CIC with 347 subsidiaries and associates, the rest of the problems have been much more at specific entity levels rather than conglomerate issues. Specifically with reference to the point about a conglomerate, I think the very important aspect is there is a need for strong group oversight, specifically in the areas of risk, finance, and compliance. These are the three areas which need to be extremely strong in terms of oversight. However, as conglomerates, we also be very conscious of conflicts of interest. For example, the bank has got customers and a mutual fund has its own customers. Therefore, if the bank has a subsidiary which is in the asset management business, the asset manager has to handle all distributors independently. And the bank has to be at arm's length with them from the point of view of business and potential conflicts of interest with a customer. Similarly, if you are in the investment banking business and you're in the corporate banking business, you do not mix your agency business versus your credit business. Therefore, the principles of dharma, of what is right with reference to the customer and the nature of the business, are at the core of building sustainable financial institutions. And as far as technology is concerned, I think we need to have an ability, of course, to have technology at the individual entity levels, because there are different supervisors for different pieces. For example, the bank is under RBI, so also NBFCs. On the other hand, you have securities and investment banking and mutual funds which are under SEBI, insurance under IRDA. Therefore, important legal entity governance is crucial, but there needs to be an overall overarching group oversight, which at the same time does not allow enmeshing of the pipes from the point of view of potential conflicts of interest. It is back to first principles. What is right, what is wrong is wrong. And the ability of an institution to say yes and no to that question is at the core of our future.
Very interesting, because I think the unsaid message I take back from whatever you say is that ultimately what is important is the governance, the quality of the governance. And then to ensure that there is no conflict of interest, the people who matter must also learn to say no. The problem is many of the times they fail to say no. Now, this automatically leads me to the next issue, is that today there is a shakeup of public sector banks that's happening. Now, I think the media is talking about your wish to take over a public sector bank. I'm not offering mine anyway. But basically, where do you think are the yields of the public sector banks? And do you think that the two measures that the government, one they have taken, and one there is a lot of talk about the government taking that path? What I'm talking about is the merger, and the next one is the privatization of the Indian banking space. Do you think that is the solution to all banking ills in India? And whether on account of this, other than consolidation, they also say that even in terms of technology, because one of the things, if you remember, the one basic point that the government always looked at while consolidating the banks was the same technology platform. So in terms of harnessing technology, in terms of being able to use better technology, and then going forward, these are the two big steps that the government is contemplating. Your views on this?
My first principle is that policy, supervision, and regulation and governance have to be ownership neutral. And the principles of governance should apply to both public sector banks and private sector banks in the same measure. And if there are challenges between how the government is thinking and how the regulator is thinking, in the context particularly of the COVID era, I think the two sides obviously can find out ways of working together. But coming out with a financial sector framework which applies to all banks and not just to private sector or public sector in terms of governance and supervision. Therefore, framework has to be consistent across entities, irrespective of the nature of ownership. Now, let us for a moment think about the ownership itself. The core of banking is protection of depositors' money. And I'm asking a question that if equity owners are going to protect their equity interest, the depositor's interest is automatically protected, because the depositor's interest comes first, the equity owner's interest comes later. Therefore, by protecting if equity owners, whether it's shareholders, whether it's boards, or whether it's managements, if they are protecting on a proper governance framework the interest of equity owners, you are first protecting depositors' interest, because if you do not protect depositors' interest, you will never get to equity owners. If depositors are underwater, equity owners are underwater much more. Therefore, the need of the hour is to align the interests of owners, boards, and management in a consistent framework to build a strong and a robust financial sector. We should not allow confusion or blurring of the responsibilities between the different categories.
True. But having said that, in terms of the privatization, if I may push a bit, would converting, let us say, what is being talked about, 5 banks or 6 banks into 6 private banks, is it the way? And if I'm linking that to technology, I would call more as mechanization, because you are translating an existing process into a mechanical process. Now, in technology, we are learned to say that if you want true benefits of computerization, as they call, it must be preceded by a business process reengineering. So the business process reengineering that I have in mind is that, do we convert 6 into 6, or we convert 6 into 1 or 2? So what will be your thought on that?
Now, my view is that the financial sector on a broader basis, without getting into public sector or private sector, is heading for greater consolidation because of the assets risks which the financial sector is carrying. And over time, capital is going to be critical. What is needed is capital, risk management expertise, and an ability to govern institutions on a sustainable basis. Why can't we in India think about something which we saw started a bank like JP Morgan maybe more than 100 years ago, and Mr. JP Morgan is no longer there, but the institution carries on forever. We need to think about institutions in perpetuity. We cannot think about our framework as short term, and we really need to build an Indian financial sector which is of global quality and size, rather than worrying about A or B. And therefore, I am saying consolidation will happen. What shape it takes really depends on the nature of this COVID situation and the depth of this crisis, which will determine the speed of change which we will see.
One final question before we wind down is a lot of talk about the use of the distributed ledger technology, where they say that particularly for KYC purposes, particularly for the land records, trade finance, this is going to be the future technology. And one thing that is linked to the distributed ledger whenever people talk about it, because often people confuse between this and Bitcoin, because the Bitcoin uses distributed ledger. So my view is one can survive without the other, but the other cannot.
Yeah.
So go to the crypto, and people are talking about central bank issued crypto. China, it has already happened. You have any views as to whether that is the future?
I think the issue about crypto, unfortunately, is it has got too much of a perception about the nation state losing control over its currency and its management. And therefore, most nation states, including the US, which by the way is the reserve currency, has not embraced it fully. Therefore, however good a technology, it needs to become a standard which is acceptable globally. And the journey for crypto is, yes, it will be used in parts because it's a wonderful technology which is a natural balancing of ledgers. But in terms of it replacing the core currency objectives and ability of the policy maker, whether it's the fiscal policy and or the monetary policy, to get comfortable with something which he or she is getting into an area of the unknown, will take time.
Thank you very much, Uday. It has been an absolute pleasure speaking to you. Now I hand it back to the host.
A very big thank you, Padmanabhan sir. Thank you to you too, Kotak sir, for joining us today here. Dear audience, RuPay product launch is now scheduled in next 2 minutes. Please do join us back for the launch. A big thanks to our audience for participating here. Have a great day ahead.
Thank you. Goodbye.
Bye. Bye.